I'm Dan Fitzpatrick at RealMoney.com. Every night we watch the same shows, Fast Money and Mad Money, and we want to use those ideas to grow our money. Well, good trading takes more than just writing down the tickers you see on TV every night and punching the buy button the next morning. I can help you know when to buy these 3 stocks I saw on TV. Today, let's look at Best Buy, EOG Resources, and Netflix. Okay, first up is Best Buy. This stock is widely becoming known as the the penultimate showroom for all the stuff that Amazon sells. So is this about ready to move higher? Let's look. Weekly chart? I don't think so. That's not what we're seeing here. We're just seeing a series of lower highs and lower lows, and this thing is, sitting there kind of right in no man's land between the resistance and support. So we're going to have to go to the daily chart and take a closer look. Okay, here I get a little more clarity. There's the big low, right? The big high volume low? No, not really. Not a real high volume low. This was a big pullback here. Big, huge, high volume down day, crappy earnings. So what's going on now? Well, the stock is actually above this level in October. So we got a higher low, great. Now we're ready to move higher and regain everything that we've lost. You buy this thing now and sell it when it gets up to 40, right? I know. I wouldn't be doing that. Look, from a fundamental basis, the company stinks. You really think they're growing? Sorry, I hate to say it, but it's true. If you're buying this stock, keep a stop right underneath this level, but go ahead and buy it. That way, if it moves higher, you'll be thinking, well, that Fitzpatrick guy was sure wrong. Sure glad I bought it anyway. And good for you. I'm right a lot and I'm wrong a lot. You know why? Because I make a ton of calls. But if the stock instead falls lower, like to 10, 13 bucks or something like that, you're not going to be left there holding the bag saying, why didn't I listen to Fitzpatrick? Because you are. Buy the stock if you want, but define your risk, and you really can't lose on this deal. Now, what about EOG Resources? Kramer likes this stock going into this year. It's one of his energy trades that he thinks is, the best. He was talking about Schlumberger, ESV, Sandridge. But I went through the ones that he was looking at, and EOG looks like it actually has the best potential from a chart standpoint. Really, really zigzaggy here, but I like this little consolidation, this little congestion. So we'll go back to the daily chart, and you can see, where's the 50-day moving average? Well, it's pretty much defining support over these last 3 pullbacks. I could draw a flat chart. You could draw lines anywhere you want on this chart, but basically this is the top right now. These are the highs, but the stock's close enough to it to where you can take a stab at it here as long as you keep a stop underneath, like literally right underneath this trend. You could keep it there. I would even be tighter. Keep it right there. Go ahead and take a stab at this stock, anticipate the breakout. If it doesn't break out, then you just sell it for a little bit of profit. Definitely don't sell it for a big loss. On the other hand, if the stock does break out, you buy a little more right there. You ride it on to victory, baby. Happy 2012. And last one we're going to look at before the Christmas holiday is Netflix. Here's the deal. Fast Money Guys had an analyst on last night. He was talking about all the various things that the company needed to do in order to, to improve the stock price. Basically, to get it going again, they got to regain some momentum in subscriptions, increase their margins, and also grow a little bit internationally. Okay, great. I'm into all of that. Love it. But from a chart standpoint, I actually like this stock right here, right now, and I'll tell you exactly why. First, why not? Stock is trending lower. I don't like to buy stuff on its way down. It never makes me money. But here, the stock is in this volatility squeeze. It's basically been trading in a sideways range for a while, long enough to where these Bollinger Bands, which are basically volatility bands, are really, really super tight. Now, we know from the bulges here that volatility is cyclical. Stock trades in low volatility for a while, then high, then low, then high. Well, now we're in the low volatility area, which means that we're going to hit a high volatility area, say that fast 3 times, pretty quickly. And so which way is the stock going to move? Well, I'm seeing a declining volume here. There's just not much trading volume in this stock during this, what I would call a basing period. Well, that's a good thing because it means that there's no real dumping. The big dumpage occurs here, so now we're building the base. If you buy the stock now, anticipating this kind of move, And frankly, I don't think that's a bad idea. You at least cap your losses by putting a stop right underneath here. You know why I harp on stops all the time? Because they keep you from losing a lot of money. And Fitzpatrick's first rule of trading is, let's all say together, don't lose your dough. If you haven't done it already, go do it now. Get over to Real Money Pro and subscribe, okay? It's a new service. It's an awesome service. Lots of good trading ideas. Some of the best are in my articles, FitzBits. 5 charts in each article, 4 articles a week. What's that amount to? You do the math. It's about 80 charts a month. You got to be able to find a good trade in there somewhere. So get over there and check that out. Also, go over to my website, that's stockmarketmentor.com. Sign up for my email list. It's totally free, and I will send you 1 video a day with a charting idea that's designed to do 2 things. First of all, teach you how to fish for yourself. Second of all, maybe toss a fish on your hook every once in a while. Okay, I'm Dan Fitzpatrick, and I'll see you next time.